China's economic growth has slowed down in the first quarter of this year. Figures released on Wednesday show a 7% growth rate with a fall in manufacturing and in retail sales. The world's second largest economy's growth between January and March was the slowest for 6 years. But how does all this affect then those who have close ties to the Chinese economy? In a moment, Andrew Thomas will report from Sydney on the Australian economy. But first, we start with Vaessen, who's in Jakarta. She looks at the Indo-Chinese dynamics and the regional economy.
China is sneezing, and as a result, the region is catching a cold. Most countries in Asia have been enjoying a free ride due to China's boom for many years. Like here in Indonesia, where exports of rubber, palm oil and coal have heavily contributed to economic growth. Money put into the economy and the country's middle class grew significantly. The boom didn't have much impact on the country's poor, by the way, because the gap between rich and poor has only become larger. So what does it mean that China's economy is slowing down? Well, for sure, the region will be taking the brunt and pain will be felt. But also analysts say that countries will now be forced to be more inventive and speed up necessary economic reforms. Just relying on their big brother for quick cash won't work anymore. And it could even turn into a blessing in disguise if countries like Indonesia will diversify exports and finally start fixing its ailing infrastructure. China's sneezing will then not necessarily turn into a serious illness.
Streets in Australia may look fairly busy, but they're not as busy as they were a couple of years ago. And underneath the surface, there is a squeeze going on. And a lot of that has to do with a relative slowdown in China, because China is Australia's biggest export customer. But its demand for Australian goods is going down, particularly iron ore, the key ingredient of steel. The price of iron ore has collapsed by more than half over the last year. That is putting a strain on Australia's government's finances. They'll be down $25 billion over the next 4 years. That's now money Australia's government has to find in other ways, either by putting up taxes or by reducing spending, all of which puts less money in people's pockets, just as prices in shops are going up because a falling Australian dollar means that imports become more expensive.